All right, hello everyone. Welcome to episode 442. Just missing that zero at the end of it. Episode 42 of Going Live with Good Soil. 42 weeks in a row now. Wow, that's we're going up fast every week. It feels like I don't know. It's a good thing to do, I think. So the macro market, Matt. That's what we kick things off with. It seems like sort of like we thought that it would just kind of trade sideways for a while since the last FOMC meeting. I mean, up or down 1 or 2%, a few days in a row sometimes, but no major moves in the macro market since that initial, up move after that last FOMC meeting. It seems like as hard as macro markets are hard to predict, it just feels like they're kind of zigzagging for a while now. That's kind of what we've been thinking. What are your thoughts, Matt?
Yeah, it's interesting. Yeah, we spoke last week about the conversation I had with Vuk, who's like a macroist by training, and he was he actually called the current market positioning kind of like a no man's land, and so he was anticipating a somewhat substantial move either up or down. Sure, unfortunately we kind of was the video feed so we're gonna have to re-record at some point.
Bummer.
Yeah, he had some really interesting things, so it's unfortunate, but yeah, I thought it seemed unlikely that there would be a kind of significant move in the short term. You've got all these kind of lingering inflation fears that, for sure, you've got commodity prices rising. Those are very serious headwinds. But I do think it's probably going to take some time for the market to, the downward movement was so significant earlier this year that I think a further downward movement would need to be justified by kind of an extended, like a recession or some sort of extended, commodity price increase or something more significant that actually affects GDP. But what's your kind of thought? Why were you convinced that it would be sideways for a while?
Yeah, I mean, we just had a crazy couple of years from COVID, lots of ups and downs, lots of volatility. The VIX was like above 30, I feel like, for a few months in a row there. And that just seems very unusual. It just felt like there's going to be a regression to the mean. And we haven't had enough sideways trade. We haven't had a long period of time, I feel like, of just like, a sideways moving market. We've had, and I just from like 15 or 20 years of being, a careful observer of the markets, of equity markets, it feels like, sort of a slower moving sideways trading market. And I define sideways maybe like up or down 10% in any given like 6-month period, not more than that, and so it just feels like we haven't had that kind of like slower moving volatility in a while. And it feels like we're going to regress to that at some point, and it's sort of unexpected. Everyone's expecting like more catastrophes in the world with the news headlines, and the market's going to crash, or some people are expecting like the market's going to rebound like crazy and go back up to the moon. And so to me, it seems like to be a contrarian in a way that makes sense is like, hey, maybe we're just going to be stuck where we are for a while, and people just need to buckle in and kind of sit this one through. That's just my thought.
Yeah, I think so too. But I think there's also still so much kind of insanity in the market. I think we still kind of have like some SPAC hangover going on, where you see some of the valuations of these companies that listed via SPAC a year or two ago, and they're still kind of crazy, to be honest with you. So I think the market's probably going to take some time to kind of unwind and better differentiate the winners from the losers.
Mm-hmm.
And that may kind of, but I think creates opportunities where winners have the potential to, really outperform, even if the overall market is sideways.
Yes.
Like the bottom decile and the top decile are going to be like drastically different.
Yeah. I love a sideways. We love it. A stock picker's market is a sideways market, I feel like, because, when the market's going up like crazy, everyone makes money, and that's good, but if you really feel like you have, an advantage of stock picking good companies and stocks that you think are valued appropriately on those good companies, then, the sideways moving market, like we could be in the midst of now, or in the beginnings of now, then if you pick good stocks, you'll do really well, versus people that pick, stocks that maybe are more story stocks or SPACs that, were nothing more than a marketing pitch. Those stocks will all dwindle kind of over time in the sideways market.
Yeah, for sure. which yeah, and I still think we're in the process. Doesn't seem
Yeah,
like those things are all marked appropriately quite yet.
that's right. Yeah, exactly. Um, so yeah, I mean, moving on to Tesla. Well, just so everyone knows, I'm catching up on a lot of news. I was on a family vacation on a cruise ship, a Disney cruise ship, actually, for 4 days. The kids loved it. I was really impressed with the food. We went into it thinking like, maybe the food's not so good on the cruise ship. We were really impressed. It was really a fun experience, and our kids loved it. Anyway, I had no internet connection for the most of the 3 or 4 days over the long weekend, and every once in a while I'd try to get into the internet, and I was like, why isn't there like a Starlink on this cruise ship? I have to pay like $100 for like 100 megabytes of, and I have these background programs on my phone running, and all of a sudden, like within 10 minutes, it says I have a $500 charge on my phone. I'm like, holy crap! And they shut it down my cellular data, and I'm like, all right, well, there was really not very good internet options on this cruise ship in international waters, but maybe Starlink, they're testing with Delta right now. I can't wait till they should go on cruise ships. I don't know why they're not Starlink terminals yet on cruise ships. That's probably in the near future, I would imagine. But it was a great vacation. Yeah, so many applications. I'm catching up to a lot of stuff still. I listened to all of Elon's interviews, which was good, but there's a lot that's been going on. I mean, I think for Tesla, the biggest thing is Shanghai reopening, right? I mean, that's officially reopened. A third of the workforce is back to work or something. Is that what you heard, Matt, or what do you?
Yeah, it's like a little bit more than a third, I think was the number, but yeah, it's kind of like, on the one hand, that's definitely super good news, and just for those who maybe are not familiar, it's like a closed loop reopening, which basically means the workers that they do have there are essentially have to live at the factory. So they're not allowed to leave. They're eating, bathing, sleeping there, and then working part of the time as well. So they're not at all back to 100%. You could say, okay, all right, it's one shift, so maybe a third capacity. But it's really unclear, I think, how the rest of the supply chain is going to be able to. If you guys don't support him, I'd suggest you do, because he puts out really great information.
It does. Yeah.
But yeah, it's hard to say how big of an impact this is going to have on Q2 numbers, and whether or not the market is really aware of how big of an impact it could be. I mean, seems like it's at least going to be 50,000 units lost of production, could be even more depending on kind of how slow the ramp back up is. But do you take this as good news or kind of mixed?
I mean, I think it's. I mean, it was really bad news because there was so much uncertainty. Like, some people were saying, "Oh, the factory's not going to start again until May 18th or something." I was like, "Oh my gosh, it's a whole nother month." So I think it's really good, a positive sign that they're kickstarting an initial, workaround right now. The one thing, I think Kelvin Yang is another guy I follow on Twitter for like a lot of interesting China analysis, and he brought up a really good point about that really logistics is the key thing, and suppliers to work, and you have to have logistics going, so you have to have the truckers be able to truck in and out of regions to move supplies, to move the car, so that they can build the cars, right? And so not until truckers can kind of roam freely between provinces or cities without all these restrictions is it going to be, kind of fair, is it going to be freed up, is the friction going to, of this COVID lockdown going to dissipate? So I guess that's an interesting point. So it seems like the truckers in China are still highly restricted, a lot of them. I'm not sure, but I guess that's something to keep an eye on.
Yeah, I mean, that's definitely a big issue on the kind of inbound supply to Shanghai. But then you've also got huge congestion at the port of Shanghai. Somebody posted a kind of a map of all these container ships that are just like waiting for their loads. So even if Tesla's producing all these vehicles, a good chunk of them are kind of intended for the European market, especially in the first month of each quarter. Germany's Giga Berlin is not up to full speed yet to be able to handle that local demand there. So you could have kind of like a glut of inventory building up that they just can't get out of China. So definitely a fluid situation. Remains to be seen how it's going to be resolved. I'm cautiously optimistic that at least it's a step in the right direction, and maybe the rest of these restrictions will kind of slowly unwind. But it's definitely going to impact their ability to. I mean, they were planning to scale up this quarter, and instead,
Scaling down. Yeah. 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 I mean, Shanghai was their over half their production. It was really ramping highest margin cars. It was really a disappointment. Um, so yeah, I mean, I see Gary Black's tweets. He's saying, Wall Street will look past this quarter. And yeah, there's some of that, but there's also a lot of short-term traders, I think, that are saying, oh, well, the earnings for second quarter are going to be very disappointing. Let's cut our losses now and get back in after that. So you don't know if those people have already acted yet, I guess. Those people, there's probably some amount of them that have yet to act on selling shares for the short term. But how much pressure that puts on the stock from where it is now, it's hard to say. And maybe the earnings report coming up tomorrow. I can't believe it's already tomorrow. It feels like this earnings, something, maybe it's because of the air has been taken out with Shanghai shutdown or whatnot, or the recent, overhang or hangover from the excitement and exuberance of Cyber Rodeo Austin and these interviews that all just come out on the flurry the last week of Elon and such. Maybe there's just some exhaustion there and it's hard to get re-excited about something new. I don't know, but it just doesn't seem a whole lot. It doesn't seem like I don't see a whole lot of excitement and buzz in social media about this earnings report tomorrow. Do you, Matt?
no, there's not. And I think I was probably one of the ones poo-pooing it a little bit, to be honest with you. We went through my model, I think it was 2 weeks ago, and I was assuming pretty modest EPS estimates of 256 or something like that. But I've been kind of thinking over things a little bit, and especially on the revenue side and on the margin side. And the more I think about it, the more I think it's kind of likely that some of the price increases that they were rolling out all of last year. There were several rounds of those. I do think those are likely to hit in Q1, at least to a greater extent than I had been modeling. So as I've been looking back at the numbers, I've been increasing my estimates. My latest EPS estimate is 297 now.
Wow, it's going up a lot.
It's gone up a lot, and it's really just on the basis of assuming the price increases are going to come through. And then if that's true, I think it's more likely than not that the material cost increase that they're seeing from the supply chain issues more than offset by the price increases. So I essentially increased. I had kept the gross margin flat on the manufacturing part of the business, and instead I just raised that by 60 basis points. And so those two changes alone brought it up to $2.97. So to me, that's a better estimate than where I was. It's still potentially a little bit on the high side. But yeah, I agree with you. I think, there's potential for a surprise, I think.
Yeah, $3.
Are not
$3
expecting that.
That's annualized. That's $12, and the price is, let's say, 1,200. That would be 100 PE at $1,200, price. So
Yeah.
right now we're below that. I mean, that seems highly attractive, and it's growing fast. So it seems highly attractive. This seems like the stock is sort of trading right where it should be, almost, to me. And I know we had the Tesla Con video was just put out last night I'm sure a lot of people saw that. We had that bull bear debate with Warren Redlick and such. But yeah, $1 trillion market cap, $1,000 is about where we're at. It seems like, the stock is sort of, in my mind, kind of right where it kind of should be. It doesn't mean it's not going to get way ahead of itself and get to $2,000 a share on exuberance for some reason, or it's going to drop to $600 or $700 again, on some terrible news or market crash. But it seems like it's to me at this moment in time, it seems about right. And the business will improve drastically, and I think the stock price will be a higher stock price will be warranted as the business improves drastically. Like if the Giga Shanghai, gets back up to speed, and Berlin and Austin ramp up. I feel like this is an exciting place to be owning the stock now. I feel like there's a real strong backbone, fundamental being, buffered here with these types of earnings.
I completely agree. I mean, especially I almost don't mind the uncertainty around Q2 because I feel like, all right, let's say Q2 is a total disaster. I think we kind of came up with a doomsday scenario, and even that was only $1 of EPS, so it wasn't like it was negative or anything like that. Now, granted, that could be wrong. They could have negative earnings, or the market could tank and Tesla goes to 700 or something like that.
Yeah.
But I mean, if that were the case, like I'd be pretty excited about that, honestly. Like, of
Yeah.
course, our portfolio wouldn't look great on like mark to market with the like paper,
Losses and stuff, unrealized
losses at
losses
that
or
point.
whatever. Yeah.
But I mean, going into the year when volumes are going to be ramping, Shanghai getting back to full speed,
Yeah.
Berlin, and I really do think with improvement on full self driving, that can be kind of like the next big catalyst for the stock. I mean, move it more than
Yeah.
if we get beat down in Q2, and then I would love the kind of back in at a low rate, just see this thing take off.
Mm-hmm.
It seems like it could go higher in the near term, could go lower,
Yeah.
but right now seems about right, and I'm very curious to kind of just waiting for with anticipation for a second half.
Yeah, yeah, it's exciting times, and you could see a year from now, the earnings, maybe their volumes have not doubled, maybe they haven't got to 600,000 units a month, but they don't need to go to 600,000 a quarter. They don't need to go to 600,000 units a quarter to have earnings of $6 versus $3. Like the scalability, Dave Lee talks about it all the time, the operating margins. Like I don't know what for them to get to, just off the top of your head, just a total guesstimate, Matt. How many vehicles do you think they could get if they got to $6, quarterly earnings? What type of what kind of and just Matt, one quick thing is Matt's internet is not going so great. So if anyone on YouTube is having trouble listening to Matt, they can go to Twitter Spaces. We're also recording this on Twitter Spaces, so we might upload it again on YouTube Live if the quality of Matt's audio on his internet is not good. But he's connected on his phone on Twitter Spaces. So Matt, how many vehicles a quarter do you think they would need to do to get to $6 earnings? If you just had to think like 400,000, 500,000, 450,000 vehicles in a quarter, if they were doing it efficiently with good margins, what do you think?
Yeah, I mean, I think they'll get pretty close to $6 by Q4 of this year. And that's assuming like a little bit under 500,000 units. So, I mean, that's assuming 500,000 units and no significant changes in full self-driving take rate, or even incremental recognition of it. So,
yeah. So you think your operating leverage, they could get to double? Just the way it scales to me, I'm thinking like 450,000 or 420,000 units. They could get to like $5 or $6 earnings. I don't know. That's just my weird eyeball guesstimate from their operating leverage. I feel like you don't think it's doable, or?
Yeah, I'm looking at my model right now. I think a lot of it does depend on like the amount that's recognizable from full self-driving. So I am assuming at some point they're gonna start recognizing more than the 42% or so or actually that's 58% that I believe is being recognized right now. I mean, if you kind of assume that that's flat, then I think you probably need roughly 500,000 units to get to about $6 per share. But that can change a lot. I mean, frankly, we don't know how good Austin's going to be, and I think like 500,000 units, this year, while those plans.
Yeah.
When the high speed, and you've got 4680s out of both sites. So my sense is when you get to whenever the point is where you get to like 1 million units, you're going to have more than $12 per share. So if 500,000 gets you $5, then or $6, then a million units is going to get you, I don't know,
$20,
something like that. It's gonna scale a lot. But I also think by the time you get to that point, you're gonna have full self-driving and like energy margins are going to be better by that time as well. So I don't know. It's just it seems like the benefits compound on each other.
Yeah. So full self-driving has not changed. and they get to 1 million units per quarter, which is maybe 2 years away, 2 to 3 years away. If they ramp everything up, that could be, $15 or $20 earnings per share per quarter. That would put the PE, 100, that's $80, let's say annualized. That's insane. That would put the PE right now at like 12. Like, that's crazy. Oh my gosh. So when you think that far out, it's like, it's really exciting in a deal. But for this moment in time, $1,000 seems about right for what it's doing,
Yeah.
which is great fundamentals if they don't grow into that, volume that we think they will, though.
Yeah. Well,
Um,
and there's execution risk for sure.
yeah.
We still don't know kind of the extent to which supply chain issues are, going to impact margins. So anything that we're estimating right now, it could be kind of undone if there's just continued supply shortages, or they have to just pay through the nose
Yeah.
in order to make these vehicles. So
Hmm.
there's, I think it's appropriate to, discount the current share price, to some extent with a higher discount rate to account for that execution risk.
Yeah.
But still, like, yeah, I'm a buyer all day long at this, $1,000
Yeah.
price.
Yeah.
Um,
Seems
just
like
because
a
I think the odds are very high that, you're going to get to these kind of crazy EPS levels in a relatively
yeah.
short period of time.
Yeah. I mean, they have a lot of obstacles, like you said, to execute. They've got to get enough raw materials or mining. They got to figure out the mining. That seems to be a bottleneck with that. Elon has referred to. They're going to have to get into mining maybe. So there's all kinds of things, but you got to have confidence that Elon and the team there are on top of all of this and doing amazing things to kind of front run all these obstacles with scaling and execution. So we'll have to see. Yeah. Um, I guess next, before we go into Q&A and stuff, the next hot topic that everyone's been talking about is Twitter and Elon. I mean, that's this is crazy. I mean, a month ago, this would seem unfathomable what's going on right now. Like it's Elon. I feel like is increasingly likely to take over Twitter and take it private and chop a bunch of heads and restructure that thing to be a much more efficient machine than what it is now. I mean, I'm sure there's some really good engineers at Twitter that he would obviously keep, but there's probably a lot of barnacles, a lot of overhead that he can cut, and he can redirect Twitter, like having a central person like Elon, like they're like directing traffic within Twitter, like, oh, we're going to focus on this product. We're going to focus on the bots now and get rid of all the bots and impersonators, or we're going to focus on, I feel like just Elon's presence could change Twitter's value proposition so much. I'm kind of bummed that I can't invest in it publicly because he's going to take it private to do that, but at a higher price of where it is now. What do you think, man?
Yeah, like, it was so exciting before he kind of disclosed his takeover bid, but he had disclosed that he owned some of it. He had all these super exciting ideas, like, oh, like, we're
Yeah.
gonna have like a Doge tip thing, and like we're gonna, have an edit button, and we're gonna, I think I forget all the other ideas, but it was just like you could see his brain, just going, and he's got this track record of executing very quickly on some of these things. And it just, as a user of Twitter alone, that got me super excited because
Yeah.
like Twitter has just failed at like innovating.
So many things. Yeah.
Like they just stalled on like the edit button. They had I forget what they had, like some goofy the feature that they introduced like a year ago, and then they pulled it like 3 months later because nobody was using it.
Yeah.
So you kind of get this, and yeah, I'm just so of Elon actually having some authority to just go in there and make the changes that need to be made. But you're right, like barnacles on barnacles, like he definitely,
Yeah.
Twitter definitely has that issue. But I think he the barnacles. But he needs the barnacles to kind of like cooperate in order to approve his offer, right? So it's
Yeah. Yeah.
like
Yeah.
I don't know if it's the best negotiating tactic to say like the board's salaries are going to go to zero and you'll all be like, let go when I come in. And by the way,
Yeah.
please approve my offer.
I know. Boiled down just said, come on, they doubled their character limit. That's 100% improvement. So maybe they have innovated by doubling their character limit in recent years, but yeah, they haven't innovated much. The board is, I see Farzad commented about the board. It's mind blowing. Yeah, I mean, it's just it's a great case study, I think, for business schools, and we're kind of at this like, you know, in this fork in the road where on one road you have like, okay, Twitter, the board and the rent seekers within Twitter are able to successfully shun off Elon and say, no, we had our poison pill. We are making sure no one's taking us over, and we're just going to keep doing the status quo what we've been doing. That's one fork in the road, and Twitter's going to kind of slowly kind of dissipate over time, maybe, with their censorship issues. Someone else will come up, Elon will recreate a new thing, or someone else, some other firm will, that's better. And the other fork in the road is Elon takes it over and instills all kinds of innovations, cuts costs, takes it private so he can cut costs to do a whole bunch of things to make it like a 10 times better product than what it currently is. And Twitter becomes like the de facto, media platform of the future for the whole world. Like this thing could be, the biggest media platform in the world above all of like TV news or radio, traditional radio, or it could be even bigger than YouTube, in my mind, with the incorporation of Twitter Spaces. And so it just seems like there's, an incredible amount of potential to be unlocked. And I think he even used that term, like, I'll unlock the potential or something. To me, that's what it seems like. Twitter has that potential, has the network effect embedded within it with enough momentum that Elon can really unlock it and take it off like a rocket ship if he takes it over. So I'm super excited about that possibility. I hope he follows through with, he looks like there's some private equity firms, Apollo Group and some others. Maybe he's talking to help him come up with maybe a tender offer or something. But I hope they have the tender offer. I think means all the shareholders get to vote on it, and then whatever the shareholders vote is what happens. Is that I'm not a M&I merger and acquisition specialist, or corporate action specialist, but I think that's what it means. I can check with one of my friends who's a kind of specialist.
So as I was digging into this, it seems like that would be like the individual shareholders would be able to indicate their interest, and then that would, I think, and again, I'm not an expert on this, but my understanding of what would happen next is they would still need the board to, the sale, because poison pill defense that would like make Elon have to buy shares at, I think it was $420 per share, which little bit of meme credit for the Twitter board there, if nothing else. But it still would essentially make it too uneconomical for Elon to get, even if there were like 30% of people who said they didn't want to, sell at this price, then Elon couldn't take the whole thing.
Now, what about this? I saw I can't remember who it was, but I saw someone retweeted it. But like, what if Elon owns 14.9% and he has like Apollo Group gets 14.9%, and he has one or two other partners each get like 10%, or so it's over 50% combined. Couldn't they kind of sidestep the poison pill that way?
I think they could. I think maybe the easier way to do this, and maybe you could combine what you're saying with the tender offer idea, which has not been made publicly yet. But I think, if the tender offer did go through and Elon could say, hey, look, like, I've got 70% of shareholders that say they want to sell at, $54.20. Board, why are you getting in the way of the will of your shareholders? So I think if he had kind of that hard data, like right now, we don't know how many shareholders support getting bought out at the price that Elon offered. But if a tender offer goes through, then that data point would be generated. And then if the board is truly acting against the will of the shareholders, I mean, that would be really impossible for them to kind of maintain their footing, that they're protecting the interests of shareholders.
Yeah.
So to me, I think it's almost like a negotiating tactic to have this tender offer.
Yeah. I mean, the only, I think, point that the board is going to maybe try to stand on is like saying like, hey, Twitter was $70 a share just last year or whatever, but I'm not sure that stands in like a court if they're being sued. I don't know. I mean, the whole market's been downsized since then, obviously. So, We'll have to see, I guess. But it does look like it could be ugly. But hopefully, Elon has thought through all these obstacles and has some uh, tools in his toolbox and allies and such to bring forth to overcome these obstacles. I do think he's set on the free speech, creating he sees the future. He knows free speech is imperative. It seems to be like close to his heart, protecting free speech at this point in time. And I think he also realizes the future is social media, and Twitter could be at the forefront of the future social media platforms, obviously, and so could others. But free speech, I think he wants to ensure as best as possible survives and persists, for the future of civilization to have, the highest probability of a good outcome. I think is how he terms it. So I think he'll persist and exhaust as many resources and tools as he can reasonably, without selling half of his Tesla shares, for example.
Yeah.
So I don't think he'd want to do that. But he could certainly borrow a large portion of equity against them if he needed to. And so we'll see how this plays out. I mean, what are your odds? What are your percentages that 3 months or 6 months from now, let's say, Twitter is controlled, not necessarily by Elon owning 50%, but let's say at his direction, he's kind of in charge of making things happen. What do you think the odds are?
Yeah, it seems more likely than not that he'll get it done, but there's still a long way to go. I mean, the market seems to be raising questions about Elon's ability to finance this. I don't
Yeah.
think that's a very serious concern, to be honest with you. I think the bigger issue is just how actively the board fights against this, and whether it's like a withdrawn kind of battle with lots of lawsuits, which it definitely has the potential to be.
Yeah.
But I think it's more likely than not. It's
I
probably
think so too. I'd say
69%.
60%. Oh, you say 69? I was going to say 60%.
Okay.
So 69. You're saying 70, about 70%. You're a little
Six,
more optimistic about it getting done.
yeah, I mean, it's somewhere in that range. Like it's more
Yeah.
than 50-50, but it's not like a 75%.
Yeah.
I
Do you
don't
think there's a way that Elon could just like pay off the board and be like, "Hey, I'll go back. I'll make sure you all have nice golden parachute retirement packages from the board. If we take this private or whatever, and we cut you. Is there
I
some way
think
he could signal that?
I think
It's
on
against his
principle
principles.
he wouldn't do that.
But
Yeah, like
out of principle, he wouldn't. But if that's the difference between making this happen or not happen, would he still out of principle not do it? I mean, I think he probably would not, but you got to think bigger and be like, so many people in corporate America get these golden parachute packages, executives that don't deserve it. And who's to say
mhm.
the Twitter board deserves it less than CEOs that have been CEOs of, Fortune 500 companies for 1 year, or, the last GM CEO or whatever it is, the last GE CEOs or whatever. Like, who's to say that, but I think out of principle, he would not. But if he could get over his principled thinking on that one little point, like, and just, you know, take the lesser evil of just affording them golden parachute, saying, "Hey, I'll cut your salary to zero when we go private, but I'll make sure you have a nice golden parachute retirement package." I think that would dramatically increase the success of a good outcome here. That's my thought.
Yeah, I don't know what mechanism he could do that by. So
Yeah.
that's maybe like, how do you legally do that in a way that like he couldn't just verbally promise them like a 1 year's like salary of $1 million per
Yeah.
board member or something like that, and
Well,
then
couldn't
go away.
verbally, but he could say, like, there's probably ways he can go about it. I see one
There,
person saying he'd give them a toilet paper parachute. I mean, he's just stirring the fire. I mean, he might say that. I would say that's probably more likely than not he'd say something like that. But that would just stir the pot even more and embolden them even more to be like, no way, we're trying to resist every possible way. We'll take more poison pills or whatever. But yeah, if he could somehow just maybe Apollo Group or someone that's like the adult in the room who's working with Elon could say, listen, we want to get this done too, but we just have to go with corporate protocol and make a nice exit package for the board that we're going to retire.
yeah, maybe I think typically management gets the golden parachutes and not the board
Not the
necessarily.
board. Yeah.
But
I don't know how that works. Yeah, but they could do something maybe.
it seems like there'd be, yeah, I don't know, maybe like 69 million Doge will appear at your wallet address if you if this deal goes
Yeah,
through.
I mean that's stuff. Yeah. It could be weird
No,
innuendos like that, maybe.
I don't. Would I support it, even though it's against principles? Sure, if that's what it took to kind of get it over the hump. But I honestly don't think Elon would entertain that.
Yeah,
I
he
think he'd
would
rather
not.
sue them than give them an extra, $1 million.
He would not. But he did entertain. I mean, one of the things he regrets the most is the SEC investigation that, he's talked about it. He obviously, that was a principle. That was a similar position he was in. I mean, that was much more like he said, like, someone has a gun to your child's head. He like used that metaphor because, Tesla is his child. And the SEC was like, we're going to ruin Tesla if you don't admit to this, and out of principle, he wanted to not, but then he did heed to the lesser evil at the time and realized I better just admit to something I didn't do to make sure
Yeah,
Tesla survived,
but you can see how much like the
That's
idea
pained
bristles
him.
him now. Like
Yeah.
I think going through that experience was more kind of conviction to him that he doesn't want to go against his principles in the future.
Yeah.
So,
And with the outcome will be whatever it may or something, he'll have some like
yeah.
romantic ideology like, oh, the outcome will be whatever it is. I'm never going to change my principled thinking. That's sort of how he thinks in my mind now at this point too. Yeah.
Point on that though, Fleets was that feature that Twitter introduced a while ago that I couldn't remember. It was like this really dumb like picture
Fleets,
sharing
it was
thing
called?
that like made no sense.
I vaguely remember
like,
that name. Yeah.
There were just like you could load up to 3 pictures, I think, and it would just like seemingly no reason, and it was this thing. And they're
Oh
like,
my
why?
gosh.
And then Elon's like, well, how about everybody who pays for Twitter Blue gets a check mark of some sort, and that would like both improve the user experience by getting rid of bots, and it would bring in more revenue for the company. So it's like he's got
great ideas.
Pretty simple idea would increase shareholder value and improve the user experience.
Yeah.
So I'm just really hoping that however the like follow through, that ultimately if he can be pulling the strings, I'll be very happy.
Yeah, he did make that comment about remember he made that comment like, I've been in meetings with companies before where in a half-hour meeting I saved the company $100 million.
Yeah.
I don't doubt that.
Crazy.
I mean, maybe that's the early seed of Elon Musk Consulting LLC or something. And it's gonna be like, I'll be your consultant for an hour and save you $100 million, and I don't know. I mean, I think there'd be some companies that would take him up and pay top dollar for that type of consulting from him. Yeah, we'll see. I mean, some would be like, a lot of boards of directors would like, hate that idea. But there are some companies I think that they're founder driven and see a lot more potential in their company that they can't tap into, and would probably take them up on that offer and pay top dollar for millions of dollars just for that like 1 hour of analysis from Elon, I would think at some point. So maybe it could be an interesting, I don't know, off the wall idea, but who knows? You can put a monetary value on his time. I think I tried to do that as an exercise in the past, and it was like $1 million plus per hour or something like that. If you think about him being $1 trillion value, if that's what his net worth was 10 years from now or something, you can kind of discount it back to today and think so. His time is worth a lot of money at this point, but if he could save a company $100 million, I'm sure he'd entertain, a large sum of money for an hour to help that company unlock that value.
Yeah, I don't think he'd personally be interested in consulting, but it was an interesting concept that he brought up in that video for sure.
Yeah. Interesting. I don't think he'd personally be interested for like doing it out of interest, but I think he could maybe think about like, hey, if I can get an extra $10 million for doing 2 hours of work, that I can put that $10 million to use for buying Twitter, improving SpaceX's, balance sheet or whatever. Maybe he'd think of it that way and be like, okay, I'll do a little bit of that here and there for a high enough price. So anyway, let's go on to Q&A, I guess. We got about 20 minutes. We'll go 5 minutes over, I guess. Let's see. From Tomer Hakohin on Twitter, can you talk about what's your options plan for Tesla on the new stock split? How much will it run up? The new stock split, I'm hesitant to do some kind of options play around. I think that it's very possible I mean, look at Amazon and Google with their stock splits, and a lot of stock splits. You have like the initial, 10% upside or 15% upside on the news. Like Tesla sort of had that day they announced it or whatever. And then there's not much after that, really. The last stock split they had 2 years ago, that was different. That was like a first time, like no one believed it. There was, some concern about naked shorts that had to cover before the split. I don't know if how much that played a role or not in the rally leading to the split, but it might have, because there was some long time shorts that had been vocally, just very short Tesla, and who knows if they were naked or not, or I don't know how, but there was some certain conspiracy theories around that. I don't know how true it was, but this stock split, I don't think Tesla goes, whatever they now, unless it's like, I could be wrong, but we're not gonna place I'm not gonna place options trades, you know, in anticipation of this stock split event, happening and driving the stock price up like 20% or 50%, just because of the stock split. It might go up anyway without the stock split, but I don't think it's gonna be a catalyst to move the stock, significantly. What do you think, Matt?
Yeah, I mean, it's like in my mind, the only way an options
Matt, I think we
plan
lost
would
you a little
work
bit there.
is if like you somehow
So
had inside information. Oh, sorry, can you hear me?
yeah, now I hear you now. Yep.
Can you hear me now?
Yeah, I hear you
Man, I
now.
need to get Starlink. Elon was supposed to get me Starlink here in Michigan like 2 years. I don't know what happened to that plan.
Yeah. Yeah, I don't
Um,
know. All right. So what do you think about the stock split? Do you think it's going to move the stock any
I,
further than it has?
I don't think so. At least I would certainly be hesitant to kind of make an option strategy around that.
Hmm.
One is such a long dated split. Like
Yeah.
normally an option is like a 1 month event or something like that, a couple weeks out and from announcement to when it's actually effectuated. Here,
Hmm.
there's a shareholder vote on it, which was already announced, and that was, kind of the initial catalyst that you mentioned. But then like the shareholders had to vote on increasing the share outstanding limit, and then the actual split would go
Hmm.
live later. Hard to try to time that. I mean, it's too lengthy of a process. Like, yeah, if you had some sort of short dated play and you called the right date when the split was announced, maybe you do okay. But in my mind, that's kind of unreasonable and unrealistic. So I wouldn't
Yeah.
want to try to
Yeah, and the
play
market
this.
often does like what, as a contrarian investor and trying to be a contrarian, the market will often do what most people don't expect. And I think so many people expect nothing but upside, if anything, for a stock split on Tesla here. And there already was some upside once it was announced that they're going to do this, right? But people are still expecting more upside. Like, what if the stock just like deflates, 20% after this split and does what no one expects? What if there's all these call buyers buying ahead of this split? It's a crowded trade. The split happens, and they're all like, "What happened? Where's my upside?" And they all have to sell at the same time, and it kind of dwindle. I don't know. It could do that too. So you have to just be aware, like the contrarian side of things. Like you have to think of those perspectives, and sometimes what people least expect is what happens.
Yeah, I mean, announcement is kind of an example of that. Elon announced a bid at $54 per share, and the following day, the stock price actually
Yeah.
down, which is like so unusual. So the market,
Yeah, for sure. Yeah. From Alafarhat6 on Twitter, once Elon buys Twitter or creates his own platform, could Dojo be used as the new algorithm for open source free speech? This is I'm not really sure. Dojo is like more of like a hardware, I think.
yeah, it's more like a training supercomputer, not like an
Yeah,
algorithm.
not a software algorithm. So, maybe and it's more being designed specifically for the self-driving neural networks. So maybe what you're implying is like, can the neural network technology that are developing for self-driving be employed in any way for free speech on Twitter or the new thing? I'm not sure if that's the idea you're asking about. Um, I don't know. I know OpenAI is doing a lot of language algorithms, so there's probably some interplay with maybe their type of language AI they're building out with censorship. I'm afraid to say the word censorship. I don't really think there should be like an automated censorship, and if there is, it should be transparent and everyone should be able to see dissect it like a GitHub thing. I think that's what Elon or someone referenced. So what do you think, Matt? Any thoughts on that?
Yeah, I mean, what Dojo is going to be really great at is like performing a massive amount on a huge data set. I think that necessarily like open sourcing the. I mean, I think you just need some kind of fairly. So I think having a speech will be kicked off. So like things that are actually illegal, like threats of violence and that sort of thing. Those could be censored, quote unquote, or however they like downvote those sorts of tweets. And then whenever there's like mule intervention for something, then that would get flagged. To me, that's kind of all Twitter needs, not necessarily some sort of like compute heavy, like AI intensive, like cutting edge algorithm. I don't think that's necessarily what they need. I think it's kind of more just like more open source and probably more simple.
Yeah, something simple. Yeah. I agree. All right. Next question is from Bertman Max on Twitter. What would you say the odds are of Tesla acquiring Lemonade for their insurance licenses plus cash? That's a good question. I mean, I would say the odds were higher if Lemonade was where it is now and Tesla was just kickstarting insurance right now. I would say the odds are, there are some significant odds, whether it's like 30 or 50%. I don't know, like maybe 20 to 50%, somewhere in that crazy range. But right now, the Tesla is so already, they started their insurance thing, a couple of years ago. They've been working on it. They have their own system, their own software, their own platform, their own everything vertically integrated themselves, right? For them to take on another business that's already vertically integrated itself, it just doesn't seem, it doesn't seem a good fit to me. Like I feel the odds are low at this point in time. What do you think, Matt?
Yeah, I agree. I mean, I think if Tesla was to have made an acquisition, it would have made tons of sense for Tesla to acquire Metromile just for the licenses. But acquiring Lemonade is a much bigger step. I mean, you could argue that it might make sense, given Tesla wants to eventually focus on like the whole home experience. So like Tesla HVAC plus car insurance plus like energy generation and storage. Like if you think those are going to be things on the line, then sure, maybe like rope in insurance as well as like an offering. But to me, that's like too far down the line of Tesla's product roadmap for them to want to acquire a company like Lemonade right now. And I think I mean they're doing this patchwork state by state insurance approach, and I think they're going to continue down that path for right now. So yeah, I think it's unlikely.
Yeah, the only way I see it happen is if Elon was very disappointed with how insurance, behind the scenes he's very disappointed with how insurance is going within Tesla, and he was to the point where he was like ready to scrap that whole team and start it over. Then he might consider Lemonade as an alternative to that.
Yeah. I mean, it could be. I just don't think it's.
I don't think it's likely. Yeah, I think it's lower than 10%.
I agree.
Tesla Tiderium on Twitter. Do you see any moat or competitive advantage for Lemonade given the number of carriers offering telematics car insurance? I mean, we see a lot of competitive advantage for Lemonade. They have their own vertically integrated stack of everything insurance related, and the telematics that Lemonade is using, they use it consistently. The other carriers, I think for I use this term a lot, rent seeking, but for rent seeking reasons, I think they temporarily use it initially for the first, to get like an initial gauge, but then they don't have the users use it anymore. Otherwise, it would infringe upon a lot of the other, people in the chain of command within the other insurance carriers that are making money. Sort of like what you see in the big problem of the big automakers. You see kind of the same kind of issue going on with supply chain. Auto dealers infringing on their ability to sell directly to, you see all kinds of like unnecessary middlemen that are part of the system that you can't get out, and they're going to fight for their right to be there still and make money. And so within the bigger legacy makers, you have tons of these types of middlemen within the whole system that I just don't think you can just tear it all out and disrupt it all with telematics to make it more automated. I don't know what, like actuaries and whatever else. But I think we lost Matt on the internet at the moment. So, but Matt's lost on the YouTube live stream, and we're on the Twitter Spaces at the same time. So, Matt, do you want to quickly answer, and I'll just repeat your answer, your gist of it on the YouTube live stream, or maybe you're back on YouTube.
Yeah, sure. Yeah, I don't know what's going on with my internet today. Apologies, everyone.
Yeah.
So I've got some new issue each week. Yeah, I mean, I agree with what you were saying, Emmet. I know there are some carriers that are using telematics kind of like for all of their USAA has a program that's doing like that, but the vast majority of the market is not. So like I actually just got my insurance renewal this week, and my Tesla is like $750, I think, for 6 months. And I don't drive very much, so it's like it's an insane amount of money. It's like twice as much as my wife's paying for a similar priced car, but because it's a Tesla, for whatever reason, it's just priced so inappropriately. Yeah, I think it's not maybe necessarily a moat that Lemonade is going to have so much as the other, kind of legacy players are going to be slow to move in this direction. And if Lemonade plus Metro Mile, I mean, this is only one piece of Lemonade's business right now. But if Lemonade is successful, then they're going to have this feedback loop that's going to be hard to replicate, from like pricing to claims, and then they're going to have extreme amounts of operating leverage. So if they can kind of get the core, like insurance quoting and like claims processing piece of the business figured out, which, to be fair, they have not yet. But if they can do that, then they're going to be able to scale way more cost efficiently than the other legacy players. So to me, that's kind of the thing to keep in mind. So they only need to capture 5-10% of the market, and they're going to have above average margins for the industry. So to me, that's kind of the play, and it's more about them getting some amount of share, and legacy losing it, as opposed to them, like, they're not going to dominate the way Tesla's dominating the auto market.
Yeah. What was one really interesting point I want to bring up about Lemonade, is sort of a canary in the coal mine of their success, of their coming potential success, is you saw the anecdotal insurance quotes by some people in like Virginia and other states of Tesla's insurance being offered, where one guy said he was being charged like $500 a month for his Model S. He did the Tesla insurance. It was like $150 a month for his Model S. So he's saving like a fortune just switching to Tesla Model S and, Tesla insurance. That, to me, is a huge signal that, like, maybe Tesla was able to score him such a low insurance because they know Teslas are safe, but also they have his insurance score data they've been tracking on his Model S for the last few months or something. And they're like, oh, this guy's a safe driver. We don't need to charge them, $300 or $400 and save them just $100. We'll charge them even less because, in our experience, these people with the 99 safety scores are. So if Lemonade can employ, apply something like that to all the non-Tesla drivers out there, I mean, imagine how much money people can potentially save and on using Lemonade, especially the good drivers could save using Lemonade insurance. And so that just excites me, that data. When I saw that data point about Tesla, I almost immediately thought of like, oh, this is great this is great news. This is a great data point for Lemonade's potential. I just think that means there's a lot to unlock, a lot of value insurance companies can unlock if Tesla's doing that. Yeah,
I agree. I mean, it's one that, as we said before, decent chance that the company fails, but like, 10, 20, 50x potential if they.
Yeah. All right. Next question is from Blake Anderson. Can you guys point me or us in the right direction about learning about options? When is it the right time to use options with a stock? It's funny. We just did an interview. We'll put it out on Saturday with a chess grandmaster. And we were thinking about titling it like, why not to do covered calls on Tesla or something, because he tells us this kind of exorbitant story of selling covered calls and how it really hurt him bad in the most recent run up in the fall. But yeah, I mean, there's lots of things you could do with options, from selling covered calls to buying call options for short-term speculative plays. There's so many. There's something called the Traders Academy within the Interactive Brokers website. And it's free. You can go into and learn a whole bunch of options. They put a whole bunch of tutorials out there. I'm sure other websites have something similar. I just know that because I used to work there. But yeah, I mean, the two ways I use options at the moment really are, if I'm selling covered calls it's because I'm already on the fence about selling a certain amount of shares. Like if I'm thinking about selling 100 or 500 shares of Tesla for tax reasons or for some other reason to pay taxes or pay something, but I'm not sure I want to. I'm kind of on the fence, let's say, right? Tesla's at $1,000. Well, then maybe I'll sell 5 covered calls for like 1,100 strike price a month out to generate income while I'm waiting to decide what I'm going to do. And then if it happens to get to $1,100, it's like a limit order that I sold my shares at $1,100 when I was on the fence about selling them at 1,000. That's how I think of it for selling covered calls in my mind. I know other people sell like their entire position covered calls, and Matt does something like that occasionally, or used to. Gary Black has done that, and others. That's not for my stomach though. And then buying calls, I'll let Matt talk in a second, but buying calls, if I'm buying speculative calls, I just, whatever I can afford to lose, I'd maybe take 10% of that, for example, and I'll try to speculate with some covered calls. So I won't use my savings that I need to retire on. It'll be basically speculative money, just a small portion of speculative money. And that way, because most of the time buying speculative out of the money calls become worthless, and then I can, live another day, so to speak. So I don't know what you want to say about any of that, Matt.
Yeah, I mean, I would just urge caution. I mean, options are a great way to make a ton of money every once in a while, but they're also a great way to lose money very quickly. So, if you're trying to learn some more about it, that's, I'm all for learning some more, but just be cautious and only invest something that you're willing to lose completely. Because, these are incredibly volatile instruments. I would just urge caution more than anything.
Yeah. From Justin on YouTube Live, Matt, can you give an update on your latest experiences with full self-driving 10.11.2?
Yeah, so I put a thread out maybe a week or two ago about just how it was like a 10-step forward improvement for me. It seemed like it solved all of the kind of major issues that I was consistently having. So that's definitely still true. But I've been amazed at like how quickly I get used to it. And then like my bar for what I'm expecting it to do just moves up. So like all the things that it used to do, it pretty much never does anymore. But now there's like the biggest issue I've seen on this version is the lane choice. It is sometimes off a little bit. So, it'll be in the left lane and it needs to turn left, but then it'll shift into the right lane for no reason. And so then I'm like running out of time. It's like becomes a stressful situation. It's not a huge deal, but it's, something that needs to get fixed on the next version. But overall though, I'm finding it so much more enjoyable to use this because it was so aggravating to use before. And I felt like I was annoying all the other drivers on the road. And I don't feel that way at all anymore. It's driving much more naturally, and the turning in particular, and going through stop signs, which used to be a huge headache. It's just much more aggressive, but it never feels like it's doing so in an unsafe way. So yeah, I would say it's been consistently good, but I'm starting to notice, the little things that now that I'm up here, I want it to go up here, and I want it to go up there. So it's very, very good though.
All right. Next question from Venice on YouTube. What do you guys think about the other large caps like Microsoft, Google, NVIDIA, and Apple? Do you like any of these? I mean, Google, I think, is here to stay for a long time. And NVIDIA, I actually think, will be a $1 trillion market cap company at some point. But in general, I stay away from these large caps. I just feel like the likelihood of them, doubling or tripling, maybe with the exception of NVIDIA, but the likelihood of them going up, 3x or 5x in a couple of years is very low, in my opinion, in market cap valuations. They're stable, probably, but all good companies almost inevitably come, it seems like come to an end. GE of the past, or GM, or all the top Kodak, all the top companies at one time that were seen at one time. You fast forward 20 or 30, a couple decades, those companies are almost like bankrupt or long gone, it seems like. So you just don't know where we are in the curve with the current large caps. I feel like the best days of Apple are behind it. The best days of Microsoft are probably behind it. Google, I'm not sure. NVIDIA, maybe have some more runway before. That's my thought. What do you think, Matt?
Yeah, I agree. I mean, there's nothing wrong with these companies, and they're clearly large caps because they're doing so well. But for what we're trying to do with the fund, and frankly, for what I think is going to happen with Decade, there's a lot of other names I'd rather be in. Yeah, Nvidia to a lesser extent. I agree with you on that point, Emmet. I do like Nvidia, and I'm somewhat partial to Google as well. But in terms of where I'd like to put an incremental dollar of mine to invest, I mean, Tesla seems much safer, and it also seems to have much more upside potential. So
Yeah.
I like Tesla, and the other names in our portfolio that we talk about all the time. I like the upside asymmetry potential of those names more than Microsoft, Google, Apple.
Yeah, and I want stocks that have like a key founder that's still like in the prime. I like that a lot. Like Elon in his prime, the top founder of all time potentially, and so forth. And Rocket Lab, we think the same way about Peter Beck. Lemonade, Shai Wininger seems to be like maybe one of those types of guys. And so yeah, Roblox similar. Dave Bazuki, I'm a big fan of. So some of those other large cap stocks, they're kind of run by boards now, or a number of senior officers that don't have as much skin in the game anymore like they used to, for like if it was a founder-led company and such. All right, let's do one more question. We're about run over a few minutes. We started late, sorry. What is suppressing Rocket Lab stock price? That's a good question. I mean, I think the overall growth tech stocks have all been hit hard similarly to Rocket Lab. There's nothing in Rocket Lab to boost its stock price, in my opinion. There's nothing fundamental. They're generating revenue. A lot of SPACs have dismal to no revenue. A lot of space SPACs too. But Rocket Lab is also group came public as a SPAC. So it sort of has that kind of bad label on it in a way, with all the SPACs kind of coming down. I think some people might be afraid of it, but in the long run, I think it's we're excited about it. But I don't think there's anything specific suppressing the stock price. Just nothing really to, fundamentally to, driven to boost it at this time. What do you think, Matt?
Yeah, so I put out a thread on Twitter a couple weeks ago about kind of like the nascent space. Know how to differentiate these companies right now. I mean, there's like maybe a half dozen.
Mm-hmm. Hmm. Okay. Yeah. Yeah. So Matt, just so you know, you were frozen on YouTube Live, where more people are listening than on Twitter Spaces. So just wanted to cut you off. I know on Twitter Spaces everyone could hear you. That was our last question anyway. But for anyone on YouTube Live who missed it, Matt was basically just saying, he put out a thread on Twitter recently about Rocket Lab. People should go revisit. But basically that folks don't know how to value these space companies. They don't know how to see the differences between the space SPACs, and they're having trouble figuring out what differentiates them from each other. And so put out an interesting Twitter thread on that. I think that's about right, Matt, right? Okay.
Time for investors to be able to differentiate. Okay, which companies, I think the market kind of wakes up to that.
Yeah.
soon.
It's funny.
Yeah.
Someone on the YouTube comment said that, Matt, you're being censored. So watch out. And people are saying, just Emmet shaking his head. Yeah. Saying, yes. Sorry, guys. Matt is with me on Twitter Spaces, recorded on Twitter Spaces too. But sorry, this last question cut out on YouTube Live. We'll end it there. It's the end of the discussion anyway. We'll try to work hard to get our internet connections sorted out for next week. And we'll talk to you guys then. All right.